What's up and welcome back to The Real Contrast. I'm Brian K.
Now I'm Kyle A.
We are here to have another day.
Woohoo!
Welcome to the day, my friend. Clever saying for the day?
Yeah. One of my favorites is if everybody cared, no one would be careless. Boom.
Love it.
That's
So
true,
let's
too.
get off into it. And this one's going to be a little bit shorter podcast because sometimes we talk too long.
We always talk too long.
Most of the time we talk too long.
I think that's what our jobs really are, is communication, right?
Yeah. And sometimes less words is better.
Are you telling me to be quiet, Brian?
You said it, not me.
Hey, okay, quick story.
Let's hear it.
Today. I just picked up a new listing,
All right.
and
Congratulations.
we're not signed on the dotted line, but it's a done deal. And I called the lady today, and I've talked to her several times, and she still doesn't know who I am when I call, right? Which is great. So I told her I was the pizza man. I said, hey, this is Jeff. I'm calling from Domino's. We're going to be a little late on your order. And she's like, oh my God, I didn't order a pizza. And she's in her early 70s. And I had to stop and say, look, hey, no, it's Kyle. And she calls me Kai. And it's really nice. And then I told her what I had to tell her. And then I get a call back from her. And then she called me back to order a pizza.
That's awesome.
So what are we talking about today, Brian K?
So I wanted to talk a little bit about a subject called hard money lending.
Ooh, that's a hard conversation.
So it's an interesting conversation. I wanted to just kind of scratch the surface because you've dealt with quite a few investors over the years.
Yep.
And money's the name of the game. Financing is the name of the game, right? And so there's a loose term that's been thrown around for a while called hard money lenders, and I think when I first got introduced to it, it sounded like a bunch of thugs that would come and they'd loan you money, all right, but boy, you were going to pay for it.
15% interest.
Buddy howdy.
Yep.
So typically, in the hard money lenders that we're working with right now, we've got a few of them out there. They've been really good to work out for opportunities that don't allow for traditional financing. And let me explain some more. If you're a private business owner, small business owner like yourself and I,
Small business. This is a big business right here.
Boom, shock. Okay, so I'm a small business owner.
Big business right there, too.
And how come we go so long on these podcasts, I wonder?
Yeah. Not because of me.
We're 3 minutes into this, and we've told the story.
You haven't even got there. Well, you kind of stretch it out. Just get to the point, Brian.
Yeah, God. Okay. What were we talking about?
Hard money.
So there's been some scenarios, oddball. Maybe a guy he's got a small business. He brings in a lot of money, but he does his best to show the government that he's spending a lot of money on the business, right? It's called tax write-offs, and if you're a small business owner, you attempt to do as much of that as you possibly can. In those cases, Freddie Mac and Fannie Mae, they don't really like to lend to you because you say that you made $27,000 a year last year in income, yet your business, which is actually buying the property or whatever else, may have brought in $250,000 or more. And you have expenses such as rent that you're paying for, but they're not going to count that. So hard money lenders give you the option to where when things make sense, they'll lend money on it. And some scenarios that we've had in the past is recently we're working with a guy. He's going through a divorce. Okay, his credit is on the backside of his shoe. Okay, because of the situation that he's been put in with his ex and everything. However, the property that he's got a chunk of change. He's got a big chunk of change, and the property that he wants makes sense. I call them no-brainer loans. It makes sense to put backing behind that as a lender, but it doesn't fit in the traditional conformity of a normal house loan that you would get. And I've seen this a lot on vacant land because there's a ton of lenders that will lend on, or that say they will lend on land. And when it boils down to it, they usually need a couple utilities, and I deal with a lot of raw land, and
Right.
so
Or you have to have X amount. You have to the price of the land has to be X amount before they loan on it.
right,
Mm-hmm.
right, yeah, oh yeah, that's another one that just
Right.
drives me nuts. It's like, do you not want money? I mean,
Right.
it's just a figure. So hard money lending, and then another one is portfolio lending.
Absolutely.
So that's where a bank kind of does it a little bit different. They'll keep their loans in house. Typically, if you go get a mortgage tomorrow on a house, they have to confine that into it. That's why you have to fit so many parameters and credit scores and all that, DTI, debt to income ratio, and all that good stuff, right? And then they buy that and they get 1,000 other Kyle A's. That's what the scary thing is. There's probably 1,000 other Kyle A's that they're going to smush you with and sell that to another investor.
There's only one Kyle A.
There's 1,000 of them out there.
There's not 1,000 Kyle A's.
There's not another Kyle A. Thank God.
So, anyways, back to this hard money. Hard money lending isn't just for like a business. Let's say you're a first time home buyer and you're only qualified for this much, and you could only it has to be FHA approved. Now you can get with a hard money lender, and for a short amount of time, right? And then you can get into that house, and then you can fix it up, and then you can refinance it.
Yep.
Done that.
Couple other things where I've seen it. Someone will place a lien on another asset.
Absolutely.
So maybe you're an investor who's just a little starved for liquid cash, but you got a bunch of paper cash, meaning you've got properties that you can loan against and everything else, and they'll come in. And hard money lenders typically can get a deal done a lot quicker than an average 30-day mortgage process as well.
Yeah. Mm-hmm. Well, and you know what, and even if you're, I'm going to kind of take this out just a little bit, is even if your client is like coming short with funds, you can actually become a lender.
Sure.
That's
Absolutely.
That's what I've started doing.
Put yourself on the lien.
Yeah.
On title, excuse me. So.
And when you're working with investors, that's another foot in the door for some people.
Mm-hmm.
When you're working with investors, they want some agents that want to put their teeth in the game, and luckily for us, we have good business, and we want to put our teeth in the game, and we get a percentage back by month, and then we also have a stake in the property.
I like steak.
Yeah, me too. Ribeye,
How do you like it?
medium rare.
Okay, we're still
In my
friends. then.
belly.
I met someone the other day that ordered a hamburger and told the waitress to kill it, and the waitress knew what she meant. She meant char that sucker, and I'm like, I don't know that we can be friends, but
Sure.
all right. So we're talking about banks. We're talking about lending. This has probably happened to you. Have you ever worked with a client that wanted to work with a vendor that you didn't like? Vendor being
Title?
a bank, a title company, an inspector.
Excuse me.
They called the HVAC company that you wouldn't recommend your worst enemy to. You ever work with a client that wants to use a vendor that you don't like?
I like everybody. I just want that on the record. He doesn't, but I like everybody. No, I have like title companies. I think some title companies have some extra hoops to jump through, especially when they're in cohorts, when they're, doing business with like a brokerage, and then you have to get extra waivers signed, and, that process, and maybe it's just my laziness. But for the most part, absolutely, that would probably be the only one. Is trying to direct your clients to kind of your team of people, not because you want them to make money, because you know that they're good.
Sure, and I don't get paid by a title company,
Absolutely,
or by an inspector, or any of these vendors that I'm using to get them business. Actually, I will say a vendor reached out to me. This was not expected, and said, "Hey, I'm going to give you a pat on the back the next time you use me." And I'm like, okay, but that wasn't the reason. I want my clients to use you because you're the right person for that job. And here's where I've ran into it. Buyers wanting to use an inspector that you maybe, I don't know, or HVAC companies. I've had this. There is a local company in town. Maybe you know them, maybe not. But there are a lot of people in our industry that avoid that company like the plague. And so if I'm a listing agent and I've got this isn't necessarily my client, but if I've got a buyer who wants to come in and they want to send over 1, 2, 3 HVAC company, I'm like, nope.
You're going to send them 4, 5, 6.
They're not allowed. There are 15 other HVAC companies in this town that you can send over.
Well, I would just, let them obviously make their decision. You've given your advice, and so let it be. I mean, I've seen some inspectors come in, and they've done okay kind of job, right? Where the inspectors, we always send our clients 3 different inspectors, and the reason we send them these specific 3 is because they do a great job. One of them, and you know them, is they'll even, once you go through all their stuff and you select everything you want done, if they miss anything, they'll buy your house. Boom. I mean, that's putting some teeth in the game.
That's putting it where it is.
And I've never had any issues with that. Now, there's going to be certain situations where inspectors cannot find everything. Good example, had one of my clients bought a house, and it was a log cabin, and he has a metal roof. Well, I was just at his house last weekend, sitting there and hanging out with him, and it comes out the roof was put on wrong, and there's no way in the middle of winter that an inspector would be on top of that metal roof. No, you need a roofing company. And the only reason they found that is because there was a leak in the shop that was already pre-known. And so the roofing company checked the house as well and found out that he needs a whole new roof. And he ain't mad at anybody, and that's just the nature of the beast.
Yep.
Things happen.
That's a fact. There's some challenges with some vendors that we have in the area where I know that by using them, it will cause delays in our transactions. And sometimes, unfortunately, we're forced to use those vendors. Mean, there's just not a way around it. If you want a septic inspection in North Idaho, if you want a percolation test, you have to use Panhandle Health. And I'm not saying anything bad about Panhandle Health. I love these guys. I'm using this as an example. If those guys were slow, your process is going to be slow. And right. When like back in 2020 and 2021, when people were buying land left and right, sight unseen, and having those tests, buddy, it was like we were asking for 3-week inspections.
Oh yeah.
Just because we knew we weren't going to be able to get those guys out. Sometimes that happens, but other times there's times if you've got to do an inspection in Burt Canyon in Wallace.
Never done that.
You might need to wait a few extra days.
Yeah.
And that's just geography. It has nothing to do with the inspectors or anything else like that. Photos down in, past Emida. If you want to get a good photographer down there, you're going to have to wait a little bit.
It's going to cost you some too. And I think at the end of the day, our job as realtors is to always be looking for better quality for our clients. Mm-hmm. Now that comes with photography. That comes from anybody that you're gonna refer out. Personally, I've had so many issues with referring people out. I'm like, you can Google that. Now, there's a couple people that I'd still refer out. As far as banks goes, we send a list of lenders that we've worked with. As far as when they need septic, we just, or even inspections, we just say this, this, and this. Now, when it comes to pictures, that's my call because I'm paying for them, and I always go with the best of the best.
Yep. So, you ever had any issues with earnest money?
Oh, yeah.
Has it ever gone past the broker? Have you ever had to take that? Have you ever been involved where it went to an interpleader?
Nope. Never had that. I've been able to talk my clients right back into shape, to be honest with you. Look, you guys messed up. We had this conversation before. I mean, this is where getting the information out right up front is very imperative. Hey, if you decide to not terminate in between this period and you go past it, you're going to lose your earnest money unless you're into this situation, right? And I've had clients that we've had to talk about it after they've decided to terminate the contract outside of their window, their due diligence period, and they just forfeited $5,000, and they're not going to fight for it. It just didn't make any sense. They were in the wrong,
Yeah.
and I'm not going to, whether they're my clients or not, I'm not going to fight for them if they've already been told and we've discussed this. I'm not going to go, hey, look, we're going to do everything we can to get you your earnest money back when you knowingly put yourself in that position.
So what's earnest money for anybody out there that may not know what earnest money is?
You tell me, Brian. You're smart.
Do you want to hear my script?
No.
Okay. Well, you're going to hear it anyways. It is the buyer's skin in the game. So essentially, when we get ready to write an offer, you're going to put a percentage. Generally speaking, in North Idaho, we see about 1% of the purchase price, or $500, whichever is more. Put that down as an earnest money. So that is generally deposited to a third party called the title company.
Yep.
And I always joke around that, remember when we were on the playground as kids and we were going to race each other, and we're going to race each other for a Snickers bar or whatever your mom gave you for your snack that day. But
do I look like I run?
no, not since you were in third grade, which is what I was pointing out. Okay, so we gave it to Joe over here to hold on to while we were running the race, and that's the title company. And so essentially what the earnest money is there for is the buyer puts that down, and as long as they perform everything contractually to what
Correct.
they said, that money then gets added to or included in their down payment for the property. It's there to protect the sellers from the buyers backing out for something that was not contractual.
Right.
I had a property, we had it listed, went under contract. The day of closing, the buyer walked away.
Heard about that? Dude.
No contractual reason. Earnest money was given to the seller.
Absolutely.
That same property goes under contract again. Day before closing, falls out of escrow again.
Was it in St. Mary's?
Down there. It was
Because I had that exact happen to me.
area.
St. Mary's, I had a client walk away on the last day and forfeited her earnest money.
So this second one, they said they had we smelled fraud all over that one. And my seller knew exactly what his rights were and chose not to release the earnest money, to the point to where we actually got threatened from the title company that it was going to go to an interpleader status.
Right.
Now, the seller, in my opinion, had every right to that earnest money. That's exactly what that earnest money was there for. And he felt that he did too, but he knew that there's a good chance that he might lose that when it got to an interpleader. You know what he told me, though?
What?
Because by the time it got to that point, he had finally sold the property. We went under contract a third time and sold the property. He goes, well, Brian, I've dealt with people like this for years. That was my job. He goes, now they're dealing with a guy who's retired and has a big chunk of money. So you could tell him to... No.
Right. Well, a lot of emotions get brought up in this.
Oh, my gosh, yeah. Yeah, but the point is with earnest money, it's the buyer's skin in the game. You as an agent can only coach your clients so far.
Absolutely.
And it's there to protect the sellers in case they for some reason. Can you imagine packing up your house, getting ready, the U-Haul's packed, and you get a phone call from your agent saying, just kidding, the buyer's left.
It happens all the time.
All the stinking time. That's what that money's there for.
We don't like to play that.
No. Well, brother man, we hit our 20-minute mark on this one. A little shorter. It'd be interesting to hear some feedback. Do you guys like the shorter ones, the longer ones? I think the longer ones probably give the listeners some time to nod off, and then our sweet voices give them a nice nap
Right.
time,
Wake
and then wake up at the very end. Whereas a 20-minute, you're only nodding off into, the 3-4 minutes, and you only get a 16-minute nap.
I think I honestly, I think I nodded off when you started that conversation about hard money. I just keep my eyes open when I sleep. I'm one of those weird guys, and I just like, and then all of a sudden I'm back.
I love it.
I
love it.
Well, anyways, thank you guys so much for joining us. This is another episode of Real Contrast with Kyle A.
And Brian K.
Peace.